Hi, this is Tim Grayson, and I'm going to talk to you about reverse mortgages. Now, government reverse mortgages are different than some of the reverse mortgages that you might have heard of many, many years ago, where the bank would actually own the house after the reverse mortgage was complete. It is no longer that way with the government reverse mortgage. They are FHA insured and HUD sponsored. When the government put together this program and they had it put together with AARP to help of AARP. They made it basically so all aspects of the reverse mortgage were friendly to the senior. Much like they did with Social Security, they make sure you get a check every single month. They don't have to do stuff like that, but they do it to help out seniors. So virtually every aspect of the government reverse mortgage is to be beneficial to you and not to the bank. And I'm going to go over a few of the ins and outs on how government reverse mortgages work, and just letting you know about the safety aspects of them and how they work. But there's very, very few people out there that have a horror story with a reverse mortgage. If you talk to anyone that you know that has one, I mean, they're all pleased about what it did for their life and how it changed their lives in many, many different ways. It freed them up so they don't have to worry about making payments when they get to be in their 70s or 80s or 90s. I mean, that's a big plus. Anything could happen in life, and if you're, at that age and all of a sudden you have a major emergency financially coming up, next thing you know, you're looking for a place to live. That's not an ideal situation for you. So what the government did is they came up with this situation with the government reverse mortgage, basically piggybacking off of what happened with reverse mortgages back in the 70s and 80s, when banks used to do them and the banks used to own the homes afterwards. They took the best parts of that reverse mortgage and then made it more beneficial. So you as the homeowner, you'll always keep your home. You could always refinance your home. You could always sell your home. When you pass on, the home goes to your children. And if whatever equity is left over in that house goes to the kids. And also, in addition to that, let's just say in some situations, like I know some people that had reverse mortgages 5 years ago when the market was at its peak, and then it obviously dropped in half. So these people owe way more on their homes than they're worth. But by law, the upside down portion of that, if they owe say $500,000 on a home that's worth $300,000, all that's forgiven. It doesn't transfer over to their kids. It doesn't come out of the estate. It's just wiped off the books, which is a very, very beneficial thing. And of course, like I said, if there's equity in a home, that goes over to the kids as well too. So I'm going to go over lots of different angles on reverse mortgages with you, and kind of cover them one by one, and we'll just discuss these at a later point. Thanks.